Let's dive into AMD stocks today. I'll show you the volatility, the smile of volatility, and examine the historical implied volatility. I'll also show you a strategy that allows you to profit both on the upside and the downside. I'll present a market forecast and discuss where this stock is likely headed. We'll touch on 3D volatility briefly. Let's start from the beginning. At the beginning of the year, AMD surged by 70%, but then in March, it also dropped by 35%, returning to its normal levels. AMD has a very important event coming up soon. We can immediately look at the volatility. As we can see, the volatility is increasing. This is a completely normal situation because volatility always rises before a report, as the stock can move very actively in either direction. Based on the volatility, we can see that the implied volatility rises to 70% after the report. This indicates that movement for this stock is forecasted to be around 10%. The stock can move either up or down by 10%. Let's take a look at the volatility smile. What does the market forecast? As we can see, there are near-term strikes and distant expiration dates. Near-term expiration dates show that volatility increases evenly in both the upside and downside directions of the stock. However, for longer-term expiration dates, volatility remains relatively flat on the upside but significantly increases on the downside. This is because investors hedge their purchase stocks by buying put options. Let's take a look at historical and implied volatility. Currently, the white line represents implied volatility, while the gray line represents historical volatility. This situation is entirely normal. These volatilities are at similar levels, except for the spike before the report, where volatility increased significantly, but that's expected due to the earnings report. Without the report, the situation would have been even better. Remember, this is how historical implied volatility should look. There are slight fluctuations, but the difference between these graphs is not critical. I always say that you can trade not just the stock itself or its price movement, but also volatility. Volatility always returns to its historical levels, as we see with AMD's stock, where volatility is around its historical values. As traders, we won't get any benefit from this situation. However, I'd still like to show you how it can work. An artificial intelligence will help us create a strategy. For instance, we can choose an expiration date in July. To specify volatility, let's say that the volatility will increase by 20%. As we can see, some strategies achieve a profit probability of 80. That's a lot. Let's see what they offer us. They offer us a reverse calendar spread, an interesting strategy. It involves buying one call option for $155 in July and selling one call option for $155. And the expiration date is in August. It's the expiration date, but the strategy is the same. It's a kind of unique strategy. You need to know how to manage it, and of course, I'm showing you purely how it can be done, how to make it easier for you. I'm showing you trading, but I don't recommend following advice from AI bots, bloggers, or anyone else, because you really have to understand it yourself, approach it fundamentally, understand how the markets work, how derivatives work, and then you become a professional and you can create strategies yourself. I'm just showing you what can be done right now. And as for the strategy I personally developed, I'll show it to you a little later. As for me, it's a bit more interesting than the previous strategy. Let's immediately look at the 3D volatility. Here, all the information is concentrated. Expiration dates, strikes, and volatility. Professionals often use this chart. I also use it to develop a more informed strategy, a more rational strategy. Let's look at the stocks, what's happening with them. I'll remind you of my philosophy. I don't know where the stock will go. I'm telling you straight, I can't say anything. I don't know and can't predict the price movements. My earning strategy relies on managing the portfolio and positions intelligently. That means you build a portfolio, you invest so that you make money with any price movement, or at least don't lose, or at least lose less than the market. That's my best and favorite strategy. So for example, AMD drops by 50% while your portfolio drops, for example, by 10 to 15%. And when AMD returns to its highs, your portfolio just skyrockets because you managed your position wisely. So how do you achieve that? Let me show you an interesting strategy, one that I personally developed. As we can see, we can make money no matter where the price goes. If the price rises to $200, we'll get $3,000. If the price drops to $125, we'll get $2,000. If the price stays between $145 and $165, we'll lose just a little, $50. But this can be fixed again if, for example, we add one more sold put to this strategy. As we see, the strategy will balance out, and here we are not losing anything anymore, and even making a little profit. But again, I'm telling you, this strategy is complex. It needs management. If you just open it like that, you will definitely lose money, because here there are uncovered options sold. And that means that if the stock goes against you, you can lose an unlimited amount of money. These positions need to be managed. You need to buy options. You need to hedge options. You need to possibly buy stocks. Selling uses delta neutral hedging. I do not recommend it. Opening this position. If you do not know and do not work with options, you will definitely lose money. I showed you this solely so that you understand the logic of my trading. How do I trade? That is, I build positions so that no matter where the stock goes, we make money. So you need to understand the main logic. Dozens of such positions can be built. even hundreds. Understanding the logic is indeed much more difficult. But if you understand how to trade, naturally you will profit from any positions. Let's see what the market predicts, for example, on May 24th. The market is more likely to lean towards the stock being between $140 and $145. That's 8.5%. And between $145 and $150. That's also 8.5%. So the market is indicating that most likely the stock of AMD will move between $140 and $150 in the coming month. This is the most realistic range for this stock. But if, for example, we choose July 2024, the situation remains a bit the same. But naturally, the probability decreases. So previously, it was 8%. Now, it's only 6% here. This is quite normal. Let's return to AMD stocks. Certainly, they are semiconductor stocks. They make good products. I myself have used AMD processors multiple times. Everything is great. I really like everything. No complaints. I only have one complaint. It's about the price of this stock. Right now, if we look, AMD is valued at $250 billion, while it earns less than $1 billion. This indicates that it is greatly overvalued. You understand how overvalued this stock is. I'm saying that most likely the stock is just too expensive. I also factor in the risk to reward ratio. Personally, in my view, it's definitely not the best idea to buy and invest in this stock at such a price because I can assume that it could be much cheaper. We'll definitely be watching the report. What will they show us? Most likely there will be a sharp movement, as possibly even upwards. But then I expect that the stock will continue to be sold off, actually for investors. This is very good news, and the lower the stock goes, the better, because then it can be bought at very low prices. That's always been my philosophy. I'm never afraid of a stock falling. On the contrary, I like this because I can buy a very, very cheap company. And of course, I wouldn't want to buy at $150. But for example, I would happily buy at $50, considering that the stock could be worth $500 to $600 or even $1,000 in 10 years. But again, this is a short-term perspective. If you're a long-term investor, then of course selling and buying makes sense. There's no rush here, probably. The point is you can just keep averaging gradually and undoubtedly be profitable in the long run. Because the company is developing very well, it may soon start adding its own graphics processors, which will certainly accelerate its growth. Certainly, the semiconductor market is the future, at least for the next 10 years. After that, something else may be invented, like quantum computing. I don't argue, but probably semiconductor stocks will also participate in this. Also, I advise you to watch my previous video. There I also in this video talked about AMD stocks, what might happen to them, what's the likelihood of the tech sector rising, and it also showed a strategy. Good luck to everyone.